Whitney Webb is not a Bitcoin influencer. She doesn't have a price target. She doesn't shill coins. She's not on anyone's payroll in the crypto space. She's an investigative journalist, the kind that governments and financial institutions would rather you didn't listen to. And when someone like that looks at Bitcoin and says, and I'm quoting her directly, Bitcoin is unique, and it's really the only opportunity like this we're likely to have, at least in this important window of time. You need to stop and ask yourself, why is a person with nothing to gain from Bitcoin saying that? Because she's not talking about price, she's talking about power. And once you understand what she means, the current Bitcoin market, the bleeding price, the fear, the confusion, starts to look very different. Stick with us. This is going to connect some dots that most crypto channels are too scared to touch. Let's start with where we actually are. Bitcoin isn't in celebration mode anymore. The euphoria is gone. The screaming headlines, the easy confidence, the feeling that price could only go one direction. That phase is over. Now the market feels different. There's hesitation. There's tension. Bitcoin is no longer moving like a rocket with everyone chasing it. It's moving like an asset stuck in a staring contest with the entire market, trapped in uncertainty, shaking out weak hands, and forcing everyone to rethink their convictions. As of March 21st, 2026, Bitcoin is trading around $70,000. Not exploding, not collapsing, just hovering in a tight range, searching for stability while traders wait for a clear signal. Bulls want momentum back, bears want another breakdown. And in the middle of all that noise, Bitcoin is sitting there, daring the market to decide what comes next. Gold, meanwhile, has gone absolutely nuclear. It's up over 80% in the past year, and now trades at roughly $4,600 per ounce. While Bitcoin bled, gold printed new highs almost every week, even though there've been some downs recently. But that divergence has a lot of people asking the right question for the wrong reasons. The wrong reason sounds like this. See, Bitcoin is dead. Gold is the real store of value. The right reason sounds like this. Why is capital fleeing to gold specifically right now? And what does that tell us about the world we're living in? Because the same forces driving gold higher are the same forces that make Bitcoin matter, and I mean really matter, beyond just a price chart. Whitney Webb has spent years documenting the quiet, steady expansion of surveillance infrastructure across the Western world. She's followed the money, the policy papers, the lobbying trails, the technology contracts. And what she's concluded is that the financial system, the same system that prints money, sets interest rates, and controls who gets to participate in the economy, is being used as a tool of control. She said this directly. Those that wish to force us into the former scenario, centralized surveillance, clearly and unequivocally see Bitcoin and privacy-enhancing technology as a direct threat to their power. Read that carefully. They don't see Bitcoin as annoying. They don't see it as a passing fad. They see it as a direct threat to their power. And when the powerful institutions in the world see something as a direct threat, what do? They don't ignore it. They don't wait it out. They try to co-opt it, contain it, or kill it. That's the game being played right now. And it's playing out in real time, disguised as a price correction. Here's where it gets interesting. There's a big push happening in Washington and Brussels right now to regulate and legitimize stablecoins. You know stablecoins, those digital dollars pegged one-to-one to the US dollar. USDC, USDT, the whole family. The pitch is, this is crypto, but safe, stable, government-friendly. Duo9, a well-known crypto analyst, put it cleanly. He said, unfortunately, stablecoins will be just an extension of this perverted system. Bitcoin remains the only hope for sound money. He's right, and here's why. A stablecoin is a digital dollar, and a digital dollar is still a dollar, which means it's still controlled by the Federal Reserve. It still loses purchasing power to inflation. It can still be frozen. Your account can still be flagged. You can still be cut off from the financial system by a policy decision made by someone you never voted for. Stablecoins are not freedom. They're fiat in a digital costume. And Webb connects this perfectly when she talks about Americans standing at a crossroads. On one side, a fully surveilled, centrally controlled digital financial system. On the other side, the possibility of decentralized, permissionless money. She said, I do really like the ethos of a lot of Bitcoiners because they really are at the frontier of fighting a lot of these encroachments on basically what is the end of privacy for Americans.
What we could see could be truly unprecedented stuff, like efforts to completely illegalize the use of Bitcoin as a currency. Now, would that actually be able to work? Would people still be able to get around that? It depends on how they do it, and it depends on how successful this dragnet of surveillance and this effort to completely upend privacy, how it actually goes. Unfortunately for me, I do hold some Bitcoin, but at the end of the day, when you're facing, when it seems like a major economic crisis is waiting in the wings, Bitcoin, just like gold, you can't eat it, right? So there's certain things that I think people should do to prepare that involve, taking care of your more immediate needs, maybe having a food store, having plans like that about securing, your basic needs for you and your family in some type of crisis. But at the same time too, with Bitcoin, I think it's important to keep in mind, there is a lot of technology that certain people use to try and keep their Bitcoin or their cryptocurrency transactions in general for being surveilled. But me personally, knowing what I know about the national security state, I don't really have any illusions of privacy in that regard. So, I think people need to keep this stuff in mind and be realistic. But ultimately, I do really like the ethos of a lot of Bitcoiners because they really are at the frontier of fighting a lot of these encroachments on basically what is the end of privacy for Americans. But I think there's a lot of other ways that this needs to be tackled as well.
The end of privacy for Americans. That's not an exaggeration. That's the direction of travel. Central bank digital currencies, CBDCs, are programmable money, which means the issuer can decide where you spend it, when it expires, and whether you're allowed to have it at all based on your behavior score. Sound like a stretch? China already does this. The US and EU are quietly building the same infrastructure, and the only asset in existence that can survive outside that system is Bitcoin. Simon Dixon, a Bitcoin financial author and one of the original voices making the case for Bitcoin as sound money, said something that should stop you cold. He said, "Fiat currency is a melting ice cube that is backed by a proof of weapons network. I choose peace over war. Boycott the central banks." Proof of weapons network. Think about what backs the US dollar today. It's not gold. It hasn't been since 1971. What backs the dollar is military dominance, the petrodollar system, the geopolitical muscle that forces other nations to use US dollars for international trade. That's not a conspiracy theory. That's recorded history. Economists on both the left and the right have documented it for decades. Dixon's point is this: you're not choosing between Bitcoin and dollars. You're choosing between a system built on energy, math, and decentralized consensus, and a system built on military force and political will. When he says he won't sell his Bitcoin for fiat, he means it literally. He doesn't want the melting ice cube. He wants the asset that doesn't melt. And here's the wild thing about right now. Gold is around $4,600. Nations that have historically held U.S. Treasury bonds as reserves are rotating. They're buying gold. Some are buying Bitcoin. Abu Dhabi's sovereign wealth funds, Mubadala and Al Warda, were confirmed in February to be adding to their spot Bitcoin ETF positions. These are government-linked funds worth hundreds of billions. This isn't retail money chasing a pump. This is state-level capital making a quiet bet against fiat. Dixon saw this coming. Webb documented the forces behind it. And Bitcoin's price is both reflecting that reality and being suppressed by the very institutions that feel most threatened by it. Now let's talk about where this could go. Crypto Gems, one of the more bullish voices in the Bitcoin space, posted something that caught a lot of attention. They said, "Bitcoin will hit $1 million, whether you like it or not. Fiat's dead. Institutions stacking. Nations waking up. Halvings don't lie. Supply is finite. Demand is exploding. Not hopium. Inevitable." They backed it up with the Bitcoin Power Curve Cycle Cloud Chart, a long-term model that traces Bitcoin's price trajectory against its mathematical growth curve. And if that model holds, a $1 million Bitcoin isn't insane by the end of this decade. Is that guaranteed? No. Nobody can guarantee anything in markets. But let's look at the structural case, because it's not as crazy as it sounds. Bitcoin's last halving was April 2024. Every 4 years, the amount of new Bitcoin minted per block gets cut in half. That means the daily supply of new coins entering the market drops by 50% overnight. There are only 21 million Bitcoin that will ever exist. As of now, roughly 19.8 million have been mined. The remaining supply comes out slower and slower with each halving. Meanwhile, demand is not slowing down, it's accelerating. BlackRock's Bitcoin ETF, the IBIT, now holds more Bitcoin than all but a handful of entities on Earth. Fidelity's ETF is right behind it. Every day, billions of dollars worth of Bitcoin are being pulled off exchanges and locked into these institutional products. When Bitcoin goes into a BlackRock ETF, it basically doesn't come back to the market. It sits there. Long-term, less supply, more buyers. Basic math. Crypto GEMs isn't making wild guesses. They're describing a supply squeeze that is already happening and will only intensify as more institutions, governments, and sovereign funds understand what Bitcoin actually is. We are currently in a window where Bitcoin is still acquirable at prices that, by 2030 or 2035, will look like a distant memory. Not because of hype, but because of what's being built around it. Governments that don't adopt Bitcoin will watch their citizens quietly route wealth into it anyway. El Salvador did it first. Several other nations have quietly started accumulating. You'll hear more announcements in the coming years. The United States, for all its institutional resistance to crypto, quietly created a Bitcoin strategic reserve by executive order in early 2025. That happened. It's documented. And it signals that even at the government level, there's acknowledgement that Bitcoin is a strategic asset, not just a speculative toy. Webb's point about the window is this: the space between now and full-scale CBDC implementation, between now and the digital surveillance grid being fully operational, is the window where average people can still acquire real, sovereign, censorship-resistant money. Once CBDCs arrive in force, and governments begin the soft pressure of incentivizing their use while complicating alternative systems, that window narrows fast. She's saying, the window is open, for now. And right now, Bitcoin is sitting around $69,000 after a brutal pullback from $126,000. If you understand what Webb is describing, you know what that means. It's not a crash, it's a discount. Let's be honest with each other now. None of this means the price can't go lower. It absolutely can. Bitcoin is still highly correlated to U.S. equities. Its 30-day correlation with the S&P 500 cites at 0.74. When Wall Street sells, Bitcoin sells. When Trump announces new tariffs and markets panic, Bitcoin drops. When macro uncertainty spikes, institutional money pulls out of risk assets, and Bitcoin is still classified as a risk asset by most fund managers. Gold is up this year while Bitcoin is down from its high. That tells you something real. Right now, in the current global environment, scared money is running to the oldest hedge, not the newest one. There are analysts calling for Bitcoin to test $60,000 again. Some are warning of a crash to $50,000 or lower if macro conditions worsen. Those aren't crazy predictions. They're real possibilities you need to hold in your head. This is not the video that tells you the bottom is in and to go all in. But here's what the data does tell us. Large wallet holders, the ones sitting on between 100,000 and 1 million Bitcoin, increased their holdings during the February dip. Whales with between 1,000 and 10,000 Bitcoin began accumulating again from late February. Abu Dhabi sovereign funds added Bitcoin ETF exposure. Smart money is not running. Smart money is buying. That doesn't make the pain easier right now, but it changes the context. Step all the way back. What is actually happening in the world right now? The US dollar has lost roughly 97% of its purchasing power since 1913. That's not opinion. That's what the Federal Reserve's own data shows. The number on your paycheck goes up, but what it buys goes down, year after year, quietly and consistently. Wars are being funded by money printing. Debt levels in most Western nations are at historic highs and climbing. Central banks are running out of tools to manage inflation without causing recessions. Gold is screaming that something is wrong. Bitcoin is doing the same thing, just with more volatility. Simon Dixon's melting ice cube is melting faster than it ever has, and more people are starting to feel it. Millennials and Gen Z who watch their rent double and their grocery bill inflate while their savings account pays 0.5% interest. Those people are the ones who understand Bitcoin. Not because of the charts, because of the lived experience of being crushed by a system they didn't design and can't escape. Duo9 said Bitcoin is the only hope for sound money. Webb said we're in the most important window of time to fight back against financial surveillance. These aren't pump narratives. These are structural arguments from people who understand what money actually is and what it's being turned into. So where does this leave us? Bitcoin is at roughly $70,000 as of today, March 20th, 2026. Down from $126,000, sitting in a choppy range. Macro headwinds are real. War with Iran are real. Risk-off sentiment is real. But the halving cycle is intact. Institutional accumulation is happening. Sovereign wealth funds are building positions. The supply is tightening. The arguments Webb makes about the importance of this window are getting louder, not quieter. There's a version of the next 12 to 24 months where Bitcoin grinds lower, tests the $60,000 to $65,000 zone, shakes out the weak hands completely, and then explodes higher as the macro picture shifts. There's another version where the bottom is already in around the $70,000 range from March, macro stabilizes, and Bitcoin begins its slow march back toward and past $126,000 before the end of 2026. Neither of those versions is guaranteed. But the version where Bitcoin matters, structurally, politically, financially, that version gets more certain every year, not less. Because the problem it was built to solve, the debasement of money, the centralization of financial control, the end of financial privacy, those problems aren't going away. They're getting worse. Whitney Webb doesn't give Bitcoin price predictions. She gives something more useful: context. And the context is this: the people who want to control your financial life see Bitcoin as the last real obstacle to that control. That's not a small thing. That's everything. Crypto Gems said hodlers win. Duo9 said Bitcoin is the only hope for sound money. Simon Dixon said he's not selling Bitcoin for a melting ice cube. And Whitney Webb said the window is open, but it won't stay open forever. The price will do what the price does. It always has. It bounced from $10,000 after China banned it. It bounced from $16,000 after FTX collapsed. It bounced from $78,000 in February. The question isn't whether the price recovers. That's almost the least interesting part of this story. The question is, do you understand what you're actually holding when you hold Bitcoin? Because if you do, really do, then a pullback from $126,000 to $70,000 isn't a crisis. It's a discount on the most important financial innovation of our lifetime, in the most important window of time we're likely to have. That's the point. That's the script. Let me know in the comments. Do you think this is still the window, or has it already closed? Don't forget to like, subscribe, and we will see you in the next one.